Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest strategy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 10 a.m. and 4 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. What if the biggest move in crypto hasn't happened yet? Not because people don't know about it, but because almost nobody understands how large the infrastructure shift actually is. Right now, while most retail investors are staring at short-term price candles, major financial institutions are quietly preparing for something much bigger behind the scenes. We're talking about JP Morgan, Ripple, BlackRock, the DTCC, ISO 222 migration, asset tokenization, and the possibility of trillions of dollars eventually interacting with blockchain infrastructure. Now, before we go any further, this is important. We are separating confirmed facts from speculation the entire way through, because there's a massive difference between what's officially happening, what companies are testing, and what the crypto community believes could happen next. And honestly, that distinction matters more now than ever, because the market today feels confusing. One day Bitcoin is rallying, the next day billions are liquidated. Fears explode across social media. And suddenly, people start screaming about crashes again. But underneath all the volatility, something very unusual is happening. For the first time in crypto history, we are seeing legislative clarity, regulatory clarity, banking integration, and accounting frameworks, all developing at the same time. The combination has never existed before. And if these systems continue rolling out of the way, institutions expect the next few years could completely redefine how digital assets interact with the global financial system. Today, we're breaking all of it down, the facts, the infrastructure, the risks, the speculation, and why so many analysts believe the real story has barely started. Because if even part of this infrastructure transition becomes reality, the market people think they understand today may look completely different by 2027. And the craziest part, most people still think this is only about price. It's not. This is about financial plumbing. And almost nobody pays attention to plumbing until the entire system changes. Let's start with the current market conditions, because emotionally, this is where most investors fail. Recently, we saw massive liquidations, violent pullbacks, huge fear spikes, and billions erased from crypto market caps in extremely short periods of time. And at one point, nearly 980 million in crypto liquidations hit the market during a major sell-off. Bitcoin dropped sharply despite positive regulatory developments, and that confuses people. How can bullish news happen while prices fall? Because markets are emotional in the short term, and crypto especially is driven by leverage, momentum, sentiment, and liquidity, not just fundamentals. Write that down. This is why people often call crypto a sell the news market. A major headline appears, the community gets excited, then traders take profits aggressively. That does not automatically invalidate the long-term narrative. And historically, volatility has always been part of crypto markets. Again, not financial advice, not guarantees, not predictions, just observable market behavior. At the same time, global macro conditions remain unstable. Oil volatility, interest rates uncertain, geopolitical tensions, liquidity conditions, all of these impact risk assets. Crypto does not exist in isolation. And yet, despite all of this uncertainty, institutional activity keeps increasing. That's the part many people are missing. One of the most important developments recently was Consensus 2026. Years ago, crypto conferences were mostly developers, startups, retail traders, and speculative projects. Now, major financial institutions are everywhere. Reports from Consensus 2026 highlight growing institutional presence involving companies like JP Morgan, BlackRock, Fidelity, Ripple-related infrastructure discussions, tokenization firms, and payment networks. And the focus has shifted dramatically. The biggest conversations now revolve around real-world asset tokenization, stablecoin infrastructure, financial settlement systems, AI and blockchain integration. Notice something important here, ladies and gentlemen? This is no longer only about speculative meme trading. Institutions are focused on efficiency, settlement speed, interoperability, liquidity movement, and infrastructure modernization. That is a completely different conversation. And whether people love or hate crypto, traditional finance is clearly exploring blockchain integration seriously. Again, that does not mean every token succeeds, and does not mean every price only goes up, and it does not mean or guarantee any specific asset reaches any specific valuation. but it does show growing institutional experimentation, outside of the box thinking. And that distinction is critical for staying YouTube safe, compliant, reality based, and fact focused. Before we move on, I want to do a quick check in. If you're finding value in this video so far, please take a moment to hit the like button. It significantly helps the channel reach more people. I would also love to hear your perspective on whether institutional adoption will truly change crypto long term, or if you think the market is still mostly speculative. Please share your thoughts in the comments below. If you'd like to see more content like this, be sure to subscribe and feel free to share this video with a colleague or friends who might benefit from it. All right, let's dive back in. Let's talk about the phrase that keeps appearing everywhere in the crypto community. Flip the switch. This phrase usually refers to the idea that once key infrastructure systems go live, markets could rapidly reprice digital assets. Important clarification, this concept is largely speculative. However, the infrastructure developments themselves are real. And that's where most people need to separate confirmed implementation timelines from speculative market expectations. This is very important, ladies and gentlemen. One of the biggest examples is ISO 222. ISO 222 is a global financial messaging standard designed to modernize how financial institutions communicate transaction data. Instead of outdated, fragmented messaging systems, ISO 222 enables richer, standardized, machine-readable financial communication. That matters because banks, payment networks, clearing systems, and settlement infrastructure all require interoperability. And interoperability is one of the biggest long-term discussions in digital finance today. Now, here where things get interesting. The DTCC, the Depository Trust and Clearing Corporation, has discussed modernization initiatives involving tokenization, exploration, and ISO 222 related transactions. And the DTCC is enormous. We're talking about infrastructure connected to quadrillions of dollars in securities, processing activity annually. That scale is difficult for most people to even comprehend. Think about that, ladies and gentlemen. Think about the numbers that I just said and what the ramifications are about that. Not just some hype video, what that actually means in real world, real time mechanics of market maneuvers. When you start taking that perspective and looking at that and take a step back, that's why I always say write things down. It changes the whole story. But again, this does not mean quadrillions instantly fall into crypto. That would be misinformation. But it does show the scale of the traditional financial infrastructure being modernized. And when crypto investors hear tokenization, interoperability, blockchain settlement, and institutional testing, they naturally begin speculating on future adoption scenarios. That's where the excitement comes from. One reason crypto narrative spreads so explosively is because the market never closes. Stocks have opening bells, closing bells, trading halts. Crypto, it operates 24 hours a day, 7 days a week. That changes market psychology completely. News can hit instantly. Momentum can accelerate instantly. Fears can spread instantly. And optimism can spread instantly too. This creates chain reactions. When Bitcoin moves aggressively, altcoins react. Leverage reacts. Liquidations trigger. Algorithms respond. Social media amplifies everything. That's why crypto often feels emotionally extreme compared to traditional markets. The market structure itself amplifies volatility. And during major regulatory institutional announcements, price discovery can happen extremely fast. That does not guarantee direction, but it does explain why crypto moves so aggressively during narrative shifts. One of the strongest arguments bulls make right now is the four clarities thesis. The idea is that crypto is simultaneously gaining legislative clarity, regulatory clarity, banking clarity, accounting clarity. Historically, industries evolve faster once rules become clearer. Institutions generally prefer predictable frameworks, compliance standards, accounting treatment, and operational certainty. Without clarity, many large firms simply avoid participation. That's why legislation matters. That's why regulatory framework matters. And that's why institutional partnerships attract so much attention. And again, attention does not equal guaranteed success, but markets often price expectations before outcomes fully arrive. That's why these discussions are so important. Because if even only portions of this infrastructure thesis become reality, the long-term impact on digital finance could still be substantial. Now let's balance the conversation properly. Because responsible coverage matters, there's still major risk here, including regulatory uncertainty, speculative excess, leverage instability, market manipulation concerns, liquidity risks, geopolitical risks, and technological competition. Not every crypto project survives. Not every institutional pilot becomes mass adoption. And not every narrative becomes reality. That's why critical thinking matters more than hype. The smartest investors study both bullish possibilities and downside risks. And at the same time, ignoring infrastructure developments completely may also mistake, especially when some of the world's largest financial institutions continue discussing tokenization, settlement modernization, and blockchain integration publicly. The key is balance, facts over fantasy, research over emotion, and long-term thinking over panic. So where does all this leave us? Right now, we appear to be entering one of the most important transition periods crypto has ever faced. Not because prices move every day, but because the underlying infrastructure conversation and conversion is evolving rapidly. We are watching legislation develop, institutional experiments, tokenization expand, settlement systems modernize, and interoperability become a global discussion. Will every prediction become reality? No. Will every token succeed? Definitely not. Some will get a cut up like sushi. But are major financial players clearly exploring blockchain-based systems more seriously than ever? Absolutely. And over the next several years, that may become one of the defining financial stories of this entire decade. You've made it this far of this video. Thank you for watching. Your being here shows that you are truly invested in revolutionary tech. If you haven't already, please hit the subscribe button and turn on notifications so we can continue growing and learning together. If you gained something valuable today, leave a like. Let me know what your biggest takeaway in the comments section. Finally, please share this with someone in your network who could use this information. Thank you again for your time, and I'll see you in the next video. Ladies and gentlemen, good morning. With all the news that we're seeing right now in the markets, I want to go over something that we're really paying attention to and that we're on the phones nonstop talking about. I want to welcome all the new members of the Patreon, all the new members of the membership channel. Remember, ladies and gentlemen, one good tip from the pits can pay for your yearly subscription. If you want the deeper macro research and understand how to navigate through this evolving times, because it looks like we're getting ready to go into another turbulent kinetic situation, do come and join us in the Crypto Republic Desk Monthly and join over 550 active traders who are taking their destiny into their own hand. So let me ask you this question right now, and this is most important. When you see everything happening right now for what it is, okay, you have to ask yourself this right now. This is something that you need to pay attention to. When we enter into the what if forest, and before I go through the numbers, I just want to lay out to you when we look at some metals right now, because metals are keying off the dollar. Yesterday, we spoke about the DXY. And if you made it here, you get the candy from the Italian ice. So as all the markets are intertwined right now, this is the most important thing to understand right now. Again, we're looking at gold, we're looking at silver, platinum, and palladium. This is the new normal right now, okay, ladies and gentlemen? We're seeing $2 ranges, we're seeing $10 ranges, and we're watching short-term players get chopped up like sushi. I've never seen so many people get chopped up like sushi. It's like Pike a day. I have never seen such professional people really, really get cut up like sushi. I mean, they're going back and forth by what they think their convictions. Do they think the market's going higher, lower, higher, lower, higher, lower? The only thing that's going lower is their bank accounts and trading accounts that got cut up like sushi. So you can see short-term players, they lack the Gucci conviction and the Gucci clarity, and they're getting cut up like sushi. But when I always say we're the remora, and we have that Gucci conviction, that Gucci clarity, we got our frosty beverage, and we're walking slowly up this frosty mountain, there's something to be had to understand that the larger players, they're accumulating on dips in the metals. The larger players, again, none of this is financial advice. This is just my own opinions, any rotators, any capacity. The larger players are accumulating everything on the dips. That's what they're doing. So I want to say the apex predators, the mercenaries like us, financial mercenaries, accumulating while the pikers are getting caught up like sushi every day, and they're trying to, chase the lightning, and they're trading volatility, and it never works out very, very well. Okay. So when we're in the what if forest, you have to understand that the ranges are very important. And this is the biggest thing ever. You have underpinnings in certain markets. Silver was put on a critical mineral list. We went over what happens when a metal is put on that list. But you have underpinnings. You have government exposure. You have the news. You have governments bidding. You have the AI situation, data center building up. And this is most important. And I like to pay attention to this. When I say we're the remora, we're looking at what the big players are doing. We're not doing what retail people do. We're not. Retail gets cut up like sushi and carried out in body bags because they don't have the convictions. They are emotionally charged and vested into what happens. They wake up and they see a candle, and if it's not going their way, that really destroys their day. When you're in finance, especially trading, even more so when you're managing people's money, you can have no emotions. None. I could never figure out why people expose too much in trading. If you want to do that, go to a casino and gamble. Trading is a speculational business. It's an occupation. It's not just roulette, red or black or green. There's got to be a logic behind why you put on positions. There's got to be risk management. There's got to be capital equity management. There's got to be risk reward ratio. If you don't see any of these, why are you even in the market? Why? You won't be able to do the same thing every day over and over and over again. And if you can't do the same thing over and over again every day, you're just getting lucky. Luck runs out. Skill does it. The whole market got disappointed by the trip overseas. They did. They thought things were going to happen, they're not. The market's preparing for kinetic action. I got off the phone this morning with some of the largest family offices that we've been working for years. What we see right now is the same exact setup before the first ME Kinetic began a few months ago. It's right there. I don't need to send you smoke signals to see this. You can look at the shortages. Why? Everywhere. You see it. But when traders have to make their weekly, monthly, and quarterly numbers, you pay attention to that. You trade off of that. None of this is financial advice, just my own opinions. Everyone takes any capacity. I told you that we're bearish on metals in the short term, but bullish in the long run. We're bearish on crypto in the short term, but bullish in the long run. I give away so much free stuff here that if you want to learn how to be a financial mercenary, no matter where you are, come and join us in the Crypto Republic Test monthly. Because the gains that are going to be potentially had when this drama begins, chapter 2, are going to be explosive. People are waiting for this. Reservation in trading is one of the most important things. It really, really is. I love reading in the comment sections here. It's going lower after you said that. So what's your point? What's your point? Nothing goes straight up or goes straight down. You don't think there's going to be a mass sell-off when kinetic action begins? Again? If it does? Then you might as well keep doing bath salt. If you're unhappy with the price movements in your own portfolio, you have the ability to transfer into another asset or roll out of it. But if you want to continue with that Gucci conviction, that Gucci clarity, rant on this channel in the comments. You'll be happy that you held on. Because when Operation Predator, when it begins, because it's the only economic way out of this situation, you'll look back at these time periods and say, you know something? I'm happy I said it and forget it. I went over yesterday, the trend is your friend, and why? But you have to understand something. The pressures to the downside, there's disappointment. If you look at silver, where that is, silver is hanging on. Again, we're bearish. We think it goes lower, but bullish on the long term. You have to ask yourself this question. Why are you in these markets right now? Why? That's the biggest question you have to. I can't answer that for you. I don't have an answer for that. I know why I'm in the markets and why I'm retained as a financial mercenary. I'm taking advantage of the chaos what this is. We're not YouTube influencers. We're financial mercenaries. If you want to learn how to be a financial mercenary, join the Crypto Republic Desk monthly. If you're tired of watching headlines and newses that you don't prosper from, come and join us or enjoy the free content right here. I love being with everybody. But at the end of the day, you don't get many operational times to take advantage in financial markets. What I mean by operational times, what I was taught on the floor of the New York Mercantile Exchange by some of the oldest and most powerful floor trading families. Operational is when there's war, famine, changes in society. We have all of those now. We have every one of them now. You have India asking their citizens to pull back on certain purchases. The writing's on the wall here. You have critical resource deficits in the TLAM manufacturing line. There is going to be famine from the lack of sulfur. We went over all of these in videos. If you had written down everything I said, right, you would be so far ahead about tracking what you want to do and what you don't want to do. It's amazing. It's like I love answering all the questions inside of our Patreon, the Crypto Club Test Monthly, when people love that one of the tips of the pits pay for an entire year subscription, and they love talking to the community. And they actually say, wow, I joined a real group. This is fantastic. Because I guess for me, there's not a lot of free help or even affordable help that you can go to get you where you want to go. But understand this, when you take your own financial destiny in your own hand, AI can't replace that. I told you before, we get phone calls every day from AI developers wanting to train off of us of what we do. It's amazing, but AI can't do this. But if you want to get ahead, take out a piece of paper, write this down. This is free advice. Commodities, copper, silver, platinum, palladium. Write down what they're used for and why. Look at the deliverable amounts of those commodities. Look who's using those commodities. Is it commercial, speculative? Are there shortages downstream? Research what an opportunity costs of creating a Tomahawk TLAM ordnance missile. Is there enough? Is there a supply glut or deficit in the materials to remake them? See, these weird things that I share with you, this is what I pay attention to. We went over a lot of things. If you're trading volatility, ladies and gentlemen, you got to be really careful with this. You just have to. We're seeing people get annihilated in silver and gold. They're just getting chopped up. There's no risk reward right here because right now there would have been an attack, but it's been put on hold because of negotiations. That could come at any moment. So the spring from the market dropping to going higher was niente, un gats. It wasn't there. That means one of the greatest things I learned on the floor, and one of the lines was drilled into my head. We're in the frozen lake. We're walking through the frozen lake. We're in the middle, the thinnest part right now. You don't want to fall through. As the wolf pack, we pack up. We're not doing tricks in the circus. But when we're in the middle of the frozen lake, when we are at support lines or resistance lines, and the news is going to move us one way or another, and all the assets in the chorus of chaos of this symphony of wealth are saying the same thing, playing the same tune, you get the Gucci clarity. You get the Gucci conviction because one thing will break the market one way or another. If you're accumulating right here, there's phenomenal levels to DCA if it makes sense for yourself. If you're positioning in futures, there's phenomenal ways to position right here. But if you're trading spot, which is the most dangerous, you could get run over by a Mack truck here, depending on what is said in the news. That is gambling. And if you want to gamble, go to the casino. I personally like playing craps. Let me know what game you like playing if you still made it here. But ladies and gentlemen, when we're at points like this, slowly take advantage of the cryptos that you like. We love XRP, the anointed one. We love ICP. We love HBAR. Those three coins to us and blockchains are the future foundations of the world. Ladies and gentlemen, I love you very much. I'll see you in this afternoon's video. If you made it this far, subscribe. We're going to have our second video around 4 or 5 p.m. And as always, Have a fantastic, safe day. Love everyone. I'll see you on the front lines. This content is for informational and entertainment purposes only. It should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You got two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shit, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building a momentum in the broad digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now be remembered. This is not the end of the story. This is just the beginning. Just open your eyes, smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all. See you this afternoon.